Every empire believed itself permanent. But for 2,000 years, a financial pulse has preceded collapse. When gold doubles against a nation's currency, crisis follows, from Rome's denarius to the Ming's paper money, from Spain's silver floods to Britain's devalued pound. Gold rose, trust fell, empires crumbled. Now that same signal is flashing for the United States. Short animated line: gold price versus domestic currency, historic snapshots. No specific numbers, show relative spikes. Part 1. Rome, the denarius and debasement. Visual, reenactment of Roman mint. Hammers, furnaces, men stamping coins. Market scenes. Rome's denarius once backed a vast empire. As military spending soared, emperors opted for a shortcut: debase the coin, reduce precious metal content, keep the face value, and hope the market doesn't notice. Scene B. Mechanism and consequences. Visual: crowds at grain markets, soldiers complaining about pay, scribes noting prices. Transition to a clean chart illustrating relative gold rise as denarius value falls, relative units. Debasement erodes purchasing power. Prices rise, trust erodes. When markets lose faith in coin, people turn to real, portable value, gold and silver. As the denarius failed, gold climbed. Each doubling was not the cause alone, but a signal that trust in the currency had already been broken. Scene C. Human angle and transition. Visual: close-ups of elderly citizen, soldier, and merchant, intercut with decaying forum and coins in hands. Slow dissolve to gold bar melting into silver into a Spanish galleon sail. Rome's empire fell not in a day, but as social contracts frayed. Money is trust given form, and when trust breaks, institutions follow. Part 4. Britain, the pound, wars and devaluation scene. A. Britain's financial supremacy. Victorian docks, Bank of England, shipping lanes, London skyline, the pound once underpinned a global order. Britain's naval and financial supremacy made sterling the anchor of world trade. Scene B. War, debt and devaluation. Visual: WWI trenches, WY2 bombed cities, ledgers showing debts, 1949 newsreel headlines. Show devaluation ticker reading, 1949, pound devalued. 2 world wars drained resources and gold reserves. In 1949, Britain devalued the pound, a public admission of fiscal strain. Gold again rose as confidence in currency waned. Scene C. Nixon, shock and shift. Archive footage of Nixon, 1971 news footage, modern dollars printing transition to global map, showing dollar adoption, and later BRICS mention, visual only. The 1971 decision to end dollar convertibility to gold restructured global finance, fiat currency dominated, creating new dynamics, but not eliminating the market's biological instinct to seek hard value when trust falters. Part 5. The gold signal, connecting the threads. Composite timeline overlaying 4 empires with gold spikes, highlighted animated bullets. Debasement, inflation, trust loss, gold rise, collapse. Different eras, same sequence. Money mismanagement undermines trust. Markets respond by bidding up gold's relative value. Gold doesn't cause collapse. It signals it. Think of it as a thermometer for institutional health.
Part 2. Spain, the Silver Deluge Scene, arrival of New World silver visual, reenacted arrival of galleons, crates of silver, Potosi mountain scenes, stock, illustrative. Close-ups of Açores, the discovery of the Americas seemed a boon. Spain shipped unprecedented silver across oceans. But abundance depressed value and gold's relation to currency shifted. Scene B. Economic feedback. Loop visual. Animated flowchart. Silver extraction gives Europe supply increase. gives price inflation, gives crown borrowing, gives bankruptcies. Include a timeline pop-up with highlighted decades. More metal mint, more medium to spin, which led to higher prices and fiscal recklessness. The crown financed wars and extravagance, then defaulted repeatedly. Silver lost purchasing power. Gold rose as a relative refuge. Scene: DC social impact and transition. Juxtapose Spanish court opulence with peasant hardship, vault doors closing. Spanish map shrinking overlaid with other rising powers. Transition: silver dust swirls that morph into printed Ming notes. The empire's treasure troves could not buy societal stability. As gold climbed, Spain's world position eroded. Part 3: Ming Dynasty. Paper money, COLLAPCEAA. Origins of paper currency visual. Scenes of Ming printing workshops. Merchants accepting notes. Marketplaces show wooden block printing in ink. Centuries before Europe's modern banking, China experimented with large-scale paper currency. Initially convenient, it became dangerous when overissued. Scene B: hyperinflation and collapse visual. Animated. Inflation curve spiking sharply. Merchants returning to silver. Paper notes burned for fuel. Dramatic reenactment, chaos in market lanes. When the state prints beyond productive capacity, currency loses meaning. Prices spiraled. Economic activity collapsed. People sought real value, gold and silver, pushing their price higher relative to paper notes. Scene: see lessons in transition visual. Pan across ruinous city streets, replaced by a vault's gold glint. Data overlay compares Ming collapse. Timeline to other empires. Crossfade to Britain imagery. Paper without credibility crumbles. The Ming lesson: fiat requires trust that cannot be printed into existence. Part 6: United States. Is the signal on scene? A post-war dollar in Bretton Woods. 1944 Bretton Woods footage. U.S. economy boom visuals. Foreign central bank reserves. After World War II, the dollar became the global reserve under Bretton Woods, anchored by gold. That system created unmatched American leverage. Scene B: 1971 and the fiat era. Nixon press conference. Newspapers, montage of monetary policy meetings. When the gold link was cut, the age of fiat began. That empowered modern central banking. Greater flexibility, but also greater moral hazard. Scene C: modern warning, signals modern debt clock graphics. Rising debt pyramid, CPI cycles. Recent gold rally animation label, as historical relative movement, illustrative. Include clips of BRICS, meetings, trade agreements, and gold acquisitions by central banks, stock footage. Persistent deficits, rising debt, quantitative easing, and shifts in global trust create pressures. Investors seek hard assets. Gold rallies are a market symptom. For the first time in decades, some observers see a pattern echoing earlier warnings. On-screen experts, lower thirds. Economist A: gold is a risk thermometer. Historian B: trust is the currency's core. Use scripted or voice actor lines. Scene D: balance and policies. Split screen: policymakers in meetings versus everyday citizens at grocery stores. A gold rally is not destiny. Policy choices, fiscal restraint, credible institutions, international cooperation can alter outcomes. The question is whether the signal is heeded in time. Part 7: What survives? Gold and SILVE. Arglo-bolts, coins, changing hands across eras, marketplaces. Throughout history, when paper promises dissolved, tangible stores of value endured. Gold and silver didn't stop empires from falling, but they preserved purchasing power for those who held them. On-screen text: hard assets as a hedge, historical perspective. Conclusion: CTA, planet Earth, slowly rotating, currencies fading, a single gold bar glowing. Channel logo and subscribe. CTA appear. History doesn't repeat exactly, but it instructs. The gold signal is a warning, not a prophecy. Will we listen, study the evidence, weigh the signals, and ask, what will money look like tomorrow?